Time for that weekly stock market update, isn't it? So let's go straight to it. Now, that's price earnings ratios. In other words, everything in red is expensive. And you're paying $33 for a dollar of profits of Microsoft or $336 for a dollar of profit of Amazon. Performance? Well, Amazon's the one which has risen this past week, nearly 8%. Eli Lilly's up 16% on a price earnings growth ratio basis. Again, everything's expensive. That's the share price relative to growth in profits. And you want the number to be below 1. You're not finding it in many places other than possibly banks and oil and gas. The Nasdaq's only up 38% so far this year. And the S&P 500 is up 16%. So I've got a lot of clients on my Great Investments program who are doing rather well because of those tailwinds from the Nasdaq. Some, they're seeing their pensions up nearly doubled so far this year, depending on the stocks that they selected with my assistance. How about the S&P 500? Well, I am not worried about recent falls that you can see there. And the reason I'm not worried about those recent falls is because I look at the MACD, which is a measure of momentum, and the dotted line is the monthly movements. It's still rising. So that suggests that momentum will continue upwards as it has done from this period here, and actually even started before that. And we're seeing that in individual stocks, by the way. The FTSE 100 likely to continue declining. So if your pension or your IFAs put their money into UK companies, well, good luck with that, mate. But that momentum is likely to accelerate lower. Going back to the US, whilst we've seen a fall in Apple, for instance, still a popular company. September doesn't tend to be a good month for Apple, incidentally. But whilst it's broken below that upward trend, what you can see is that momentum is likely to continue. Again, despite those falls that are likely in the short term, I continue holding it because I don't try to trade my investments. What about Alphabet? Boom, that's the direction. The monthly momentum likely to continue, still popular with all the major analysts and investment banks. However, be warned, August and September are bloody awful months for Alphabet to be up at all. Don't expect it. Whereas for the rest of the year, should do rather well. The analysts still think there's more upside. That's the return potential if the average analyst forecast is correct. Whereas if the highest Alphabet analyst forecast is correct, you're going to make a lot of money. Microsoft, again, like Apple, falling in the near term. However, not something I'm particularly worried about. I'm expecting the monthly MACD, which is the more important momentum measure, to continue higher, even if that falls low. And if you want to look at the fundamentals on all this, I do this on my channel in any event. So that shouldn't be a problem for you either on my YouTube channel. Just have a look at alpeshpatel.com/links. Amazon continues upwards, and probably of all the major tech companies, that one looks the most promising at the moment, actually, because it's got a long way to go to generate those returns, and it will generate those returns. Again, the only thing I'd say to you is September doesn't tend to be a good month for it, whereas the rest of the year isn't too bad. Now, the analysts also agree, lots of upside. Disney had a good week. However, what do they say? One swallow a summer does not make. Now, that should hopefully go in that direction, but it's a bit early to say for now. Certainly, again, the analysts think so. What about, and they think 21%, what about NVIDIA? What are you going to do with this? You've had a fantastic run so far this year. It's now looking toppy. If you are risk averse, you sell. If you are risk loving, you continue holding. If you are risk averse, you sell because you see the momentum likely to decline in the near term at least, and it might go back up again. Look at what it can do. Look at how much it can fall despite having great upside. So risk averse, might be time to sell. Risk neutral, might be time to sell half of it. All right? Even if overall the analysts think 20% more to the upside. As for Tesla, that's the direction of travel, and it's a volatile one. It was one of my special situations ones that I put on my Telegram channel now and again. If you want to see those, alpeshpatel.com/links. Meta is reaching its all-time high. Before it does, it may well do something like that, and it looks like it probably will, because that will go up, this will decline and then move up, this will decline and then move up. So probably by New Year we should be a little bit higher than where we are now, but we'll fall before we rise. Service Now, and good company, but a few weeks on the downside, and it can do that. It can do that even in an upward trend. You see it there. You've seen it before. You will see it again, right? And what we're trying to determine is that decline longer term, or is it one of these which will go up? And probably the best way I've ever found to find that is the monthly MACD, and at the moment it suggests it's a temporary one. It's a downward fall, temporary, in an upward longer term trend. Simple as that. And it's also based on a lot of the other factors that I look at, such as valuation of the companies, earnings growth, dividend yields, momentum, cash return on capital invested. If you want to learn more about these things, well, I've told you before and I'll tell you again. Where you need to go, campaignforamillion.com, a lot of free resources if you want to learn more about investing, which you should, especially if you've got a pension, you ever plan to make money.